Hey, a very good morning to you traders and a belated Happy New Year. Let's get straight into it. So at the end of last year, I did an in-person presentation in front of a group of traders, and one thing I talked about was becoming the trader you want to be in 2017. Something I do every year, analysing 2016, but more importantly, focusing on what you want to work on for the next year to improve your trading consistently. Okay, so one of the things that I didn't mention was when I look back through my career, my trading journals, and looked at it compared to my P&L for certain months, certain quarters, one thing that stands out to me heavily is that my very best spells or very best segments were when I was spotting price action strategies, price action setups, I guess you could say, that no one else was spotting. So none of this, not just technical analysis where people are analysing and saying, oh yes, the head and shoulders here, support and resistance here. It's basically saying, listen, is there a pattern in what's happening in this window of time that I can trade? If there is, trade it, double down on it until it stops working. So with that in mind, this year is very much going to be focused on looking for these patterns that other people aren't seeing, trading them, and then seeing where we're going. That's what I'm going to be with the videos as well. Sharing those patterns with you, sharing the things that I've spotted, sharing my analysis, and then be talking about how I traded them. And then we get into the psychology side, what went right, what went wrong, drilling right down into the tape aspect of it. Okay, so let me just clear this window here because this is for something else that I've been doing. However, as we know, let's look at a 60-minute of the DOW. I've got the DOW here. And I could do with getting rid of all those. We get review all drawing. Okay, so we're in this kind of range now, aren't we? We've been here for a while. We're sitting here. We're doing not a lot. We've got loads of catalysts to the downside, loads of catalysts to the upside potentially, but we've done nothing. Haven't quite tagged the 20,000 yet. It's teasing the bulls, but we're in a range. So what does that mean in terms of short-term trading? So let's have a look. If we go to the 15-minute chart, let's go to a 5-minute chart here. What it tends to mean is that markets will oscillate, and my golden rule is, and I've said this before, is that if you're in a range, you need to be looking to fade extremes. It doesn't necessarily mean to be shorting highs of the range and buying lows of the range, because that range could be fairly wide. But what it does mean is if you're getting extensions, rather than looking for that pullback continuation trade that I like so much, it's more a case of looking for the drive, the pullback, and the fade away. That is the name of the game when you're in a range. Is it going to work every time? No, it's not. However, when you're in that, that's the place to look at it. When you're outside of the range and volume's coming in, yes, then you ignore that, you get rid of that completely, and you look for your pullbacks to your moving averages or however you want to quantify them, looking for the extensions, the further moves, the little stretches that just take out the people or the stops to the upside who are wrong, or to the downside if we're the other way around. Okay. So with that in mind, a couple of things I've been looking at. One of them is the opening drive, and we'll share that another time. But today I want to talk about the turning points and the time of day of the turning points. Now, just for background here, why do I look at time of day? Because it's so important. I remember a spell back, I can't remember what year it was, but the FTSE used to reverse almost on the dot, 3 o'clock UK time. Okay, it would be 3 o'clock and then it would just literally turn around and go the other way, and that was tradable for such a long time, and it was something that people just weren't spotting, but it was such a profitable thing. Okay, so moving on quickly, what have I spotted here? Well, I talked about this before, but if you look at the window of about let's just get rid of that drawing pen, about 4 o'clock UK time to about 6 o'clock US time. So if you're spread betting the Dow, this is the time window we're looking at, and while we're in this range, this seems to be working. Look how many times we reverse at that particular time. It's not accurate in terms of it's not exactly on the dot. However, buying is being shut off, selling is being shut off. So how do you trade that? If you're long, you start to scale some out. If it's pushing up into that time window, maybe you start to then look for some kind of price action pattern, some kind of tape pattern that's going to give you a turn. So let's have a look at the charts and see exactly what's going on. So look here, we have a reversal around here, around this 5 o'clock level, 5:15. So that fits in with our window quite nicely. Yes, it's a wide window, but sometimes you're not going to get it accurate. If you're short, you're starting to look to cover that short into that 4 to 6 zone. If you're looking for a fresh trade, you're looking to fade extreme moves in that time zone. Let's move on back to the day before. Same kind of thing. Look at the low here, 4 o'clock on the low. Good drive as well. Probably got a lot of people shorting this breakout, but it was within that sweet spot window. 4 till 6. Look at that. 4 o'clock. We reversed and actually got a full reversal from that. We'll go back again. The reversal here. 4:35. Huge reversal back up. Huge reversal back up. And in fact, we actually got double reversal within that time window. So the one takeaway from that is do not look for continuation trades in that 4 till 6 zone. And that's, if anything, you do not necessarily have to look for a fade trade, but not looking for a continuation trade. I look at this one again. 20 past 4, straight on it. 20 past 4, and then further on up to that 6 o'clock zone. This was the fade zone. This was the time not to get involved. This was the time to look for reversals. And subsequently, we came back, tagged the VWAP, and almost did a full reversal. Let's move on. We've got more examples here because this is just a continually solid pattern. 4:30, back up, reversal, again, unwind, no real direction, no real volume coming in on that day. Same with this one. This is interesting because, we got this drive up, and this pushed on for quite a long time. Look how long it's pushed on for. But again, it ran out of steam at around that 5:30 or in that 4 till 6 window. No more continuation, running out of steam. I could go on, guys. You can look for it yourself. Have a look at your charts and look to see. Again, the good drive, 20 to 5, we had the reversal. So what is the pattern to look for, and how am I going to trade that? What I'm going to do is, if I'm in a trade, I will be looking to come out of it between that 4 till 6 window. 4 till 6 UK time, sweet spot. Look for any extension like this, great extension, high volume, that kind of flush move to exit on, or vice versa. If I'm not in a trade and I'm looking for some kind of reversal, am I in that time window? Yes. Are we extended? Yes. Are we getting a flush? Are we hitting a key level? All these checklists we do. Okay, great. Now I'm just adding that extra layer of edge, knowing that history, as in the last few weeks, is what I'm bothered about as a trader, day trader, we've seen as reversing at that time. So going to give it a go, look for some sort of pattern. Maybe you don't have to hit it straight on the flush. Maybe you're looking for that higher low type trade. Whatever, the point is you structure it in with your setup or what you like to see, whether that is a press to lows, a fail and then go, whether it's a press to low, a higher low and go, whether that's a press to lows, real extension and go on that, or vice versa. But adding that extra layer in, which is what I'm going to be doing, the 4 till 6 reversal area will just give you that confidence to take it a little bit more aggressive perhaps. Will it carry on working? Who knows? However, the point is you spot these patterns and then you extrapolate them out and keep moving and keep trading them until they stop working. So that's what I'm going to be looking at next week specifically, and we'll also be looking out for more stuff, as I say, doing some study on the opening drive, trying to find a pattern on that. This is the DOW, by the way, so perfect for spread betting between those hours. Alright guys, take care, have a great trading week. Back with another video soon.